Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Chinese data released over the weekend indicates their domestic economy is holding its own, and their export economy continues to thrive despite Trump. But first, a look ahead. Locally, we'll get a fix on retail sales this week with the release of the October electronic cards data, and possibly at the end of the week we'll get the REINZ sales data. In Australia, we'll be looking for updates to their consumer sentiment surveys and the labour market data for October, where only modest changes are expected. In the US, the federal government shutdown is unlikely to be resolved, so the ADP Employment Report will take on extra importance as they're releasing this data now weekly. Earnings reports will keep coming, and there'll be important updates from Japan as well. And this week, the Chinese released their monthly data dump, and they too are expected to show just modest changes. Over the weekend, China said its consumer prices rose 0.2% in October from a year ago, more than the expected no change and jumping back from a 0.3% decline in September. It was their first increase in consumer inflation since June and the fastest pace since January. Stronger than expected holiday spending probably caused the uptick. Food prices, though, fell 1.6% on this annual basis. Dairy prices were down 1.7%. But both beef and lamb prices rose by 5.6% and 2.4% respectively. Meanwhile, China's producer prices eased another 2.1% in October on the same basis, marginally less than the 2.3% drop in September, and the softest decrease since August 2024. But it does extend their contraction for a 37th consecutive month. This result came in slightly better than market expectations of a 2.2% fall. And China reported that their October foreign exchange reserves swelled more than expected and are back to the highest level in a decade. China also said its exports dipped unexpectedly from October a year ago as shipments fell 18% to the US on that basis. Imports from the US fell even more. But other than that, it seemed to be business as normal. Australia and New Zealand both recorded healthy trade surpluses with China in October. Overall, China's October trade surplus came in at $90 billion for the month, but that missed many expectations by analysts that it might top $100 billion as it did in August. In Taiwan, exports from the island nation surged 50% from October a year ago to a record high of $62 billion, accelerating from a 34% rise in the previous month, which itself was very impressive. Taiwanese exports were 1/5 of those in China, despite having only 1.6% of the population level. For reference, Australia's exports in October are expected to be reported on December the 4th at $30 billion, and Australia has a similar population to Taiwan. The comparison emphasises how special the Taiwan export prowess is. In the world's largest economy, the November update of the University of Michigan's Consumer Sentiment Index has fallen to near an all-time low in a survey that began almost 80 years ago. Only the June 2022 recording was lower. A small dip was expected, but this time a large dip was recorded. Americans are worried about both their current personal finances and year-ahead expected business conditions. It's glum reading, and the index is now 30% lower than year-ago levels. American consumer attitudes are in a full bear mode. Meanwhile, the New York Fed's latest update of their survey of consumer expectations reports inflation expectations dipped to 3.2%, and some key opinions about their labour market weakened. The US federal government shutdown continues, with the White House unable to get its way in the Senate, either with the Democrats changing their healthcare bottom line or the Republicans adopting the nuclear option. And that means the air traffic restrictions are rolling out and becoming more pervasive. Thousands of flights have now been cancelled or delayed. In Canada, they delivered something of an unexpected positive surprise from their labour market in October. You may recall the unusually strong 60,000 September jobs gain, driven by very strong full-time employment. Analysts had expected a pause. But in fact, they reported a 67,000 jobs gain in October, although this one was largely driven by a rise in part-time jobs. Rather than the expected rise, their jobless rate fell, but by most standards it's still pretty high. The US Treasury 10-year yield is now at 4.09% and up 1 basis point from Saturday at this time, down 2 basis points from a week ago. And the price of gold will start today at fractionally under $4,000, down $5 from this time Saturday, basically back to week ago levels. And American oil prices are slightly firmer from Saturday at just under $60 a barrel, with the international Brent price still just under $63.50 a barrel. And the Kiwi dollar is now just on 56.3 US cents and up 10 basis points from Saturday, but down a full 1 cent from a week ago. That is its lowest level in 7 months. Against the Aussie, we're 10 basis points lower at 86.5 Australian cents, and that's a 12-year low. Against the euro, up 20 basis points at 48.7 euro cents. That all means our trade-weighted index starts today at just over 60.8 and firmish from Saturday, but it's lowest since July 2009, a 16-year low. And the Bitcoin price starts today at $103,678 and up 1.5% from Saturday. Volatility over the past 24 hours has been modest at just on plus or minus 1.1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.